Welcome to Biz Lounge, where we'll give you a peek into the minds and souls of some of the greatest business leaders. Bain & Company is a consulting firm often associated with U.S. presidential candidate Mitt Romney, who worked in the firm's Boston office till the early 1990s. Here in India, the company set up shop in 2006, and since then, it's become their fastest growing business globally. And leading the way here is Shri Rajan, who joins us today. Shri, thanks for joining us.
Thank you for having me.
Before we begin our chat, here's a look at how the company got its start in the country 6 years ago.
Many of our global clients were asking us about India, and they were looking to make investment decisions, participation in Indian market, India's growth story. So it became absolutely important for us to have a local office, a local practice that can help our global clients establish a footprint in India.
We started with 4 people, and now we are over 200, close to 220 people that we have in the India operations.
We moved a critical mass of partners and managers who knew India very well. They had grown up in India, but they had worked in US for many years. So bringing them back into Indian context, such as Shri and myself, actually helped quite a lot.
We have probably served in the region of about 130, 140 clients over the course of the last 6 years. We serve clients in healthcare, in industrials, infrastructure, financial services, and so on, private equity. And in fact, our private equity consulting practice is one of the largest that we have. Globally, it's about 25% of our business worldwide. And in India also, it's somewhere in the range of between 15 to 20% of our business. Over 60% of our business comes from working with local companies. I think the next phase of growth for Bain as well as for the economy and for business in India is going to be to help companies really develop global capabilities and actually become global corporations as well.
So working for a consulting firm, you speak to many CEOs in various industries and in companies big and small. Can you talk a little bit about what business sentiment has been like, what people are thinking about the economy?
So I think there is certainly a mood of caution out there. I do believe that at the end of the day, we will turn around, and I do believe that we will come back on a positive trajectory. But you can't escape the numbers that have come out recently. Mm-hmm. You know, the fact that GDP growth is 5.3%, manufacturing output growth has been 0.8%. I think just points to the fact that there's a significant amount of growth expectation that has really not been met at all. Mm-hmm. And so the level of capital formation, the level of capital investment in this country has declined fairly significantly. And even if it were to pick up now, our perspective is it'll take another 12 to 18 months before we see the levels of growth that we saw even a couple of years ago. Mm-hmm. So there is, I think, far more caution than there was even 12 to 18 months ago, is the way I would characterize it, especially in the manufacturing sector.
Bain & Company has been in the consulting business for the last 6 years. Can you talk about any interesting trends you've seen in this space since you started?
Yeah, so when we came here in 2006, a lot of the focus was really on growth. And we were advising companies on how to enter the Indian market or how to grow their presence in the Indian market. And it was really all about, how do we really increase our presence in India? I would say over the course of the last 12 to 18 months, what we have seen is far more focus in terms of efficiency. How do we create organizations that are more efficient? How do we look at costs from a zero-based basis? How do we make sure that the organizations are as efficient as they can be? That would be one theme. Mm-hmm. The second theme that's interesting is also that companies, Indian companies especially, are looking outside the country as well. Mm-hmm. And I would say the flavor of the day seems to be Africa. Mm-hmm. A lot of Indian companies are looking at Africa as somewhat the equivalent of the next India. And, there are many public examples. The Tatas have been there forever. Airtel has gone there in the past few years and so on. But what is also not known is that there are many other Indian companies that are also looking at Africa as a market. And a classic example of that is Godrej, which over the course of the last few years has stitched together a set of acquisitions to create a pretty good presence in the consumer product space over there.
And Bain & Company has also been tracking the growth of the private equity market here in India. Can you talk about the evolution of the industry since you've started operations here?
When we came in 2006, the market was just taking off. The private equity market was taking off. 2007 was really the high water mark, of private equity investing in this country. There was probably about $17 billion worth of equity that was put into different companies around the country. And since then, it's actually declined fairly significantly. And it's on its way back, but I don't think it's anywhere close to where we were in 2007 for a couple of reasons. One is that there is this uncertainty that exists, the policy uncertainty, the regulatory uncertainty that exists, and people want a little more certainty before they will put money to work. I think that's one aspect of it. The second aspect of it is that a lot of the money that was put to work in 2006 and 2007 has not been realized yet. And so till the exits happen, till the money gets realized, till the returns happen, I don't think you're going to find limited partners or the people who have the money to put into these funds. I don't think they're going to be willing to put money back again into the funds that are investing in India. So I think a critical element of this has to be really the exits in the private equity space before we see a lot of activity as well.
Can you talk about the PE deals that happened in 2011?
The market is somewhere in the range, we think will land in the range of about $11 billion by the end of 2012. Which, if you compare to the $17 billion number that we talked about in 2007, is much lower. And one of the characteristics about the Indian private equity market is that the average size is about $25 million, which is far lower than what you would see not just in developed markets, but actually in other parts of Asia as well. And so it takes a lot of work to do private equity in this country. And so far, we are nowhere close to where we were even in 2007.
Why do you think it takes more work to do it here?
The other characteristic of the private equity market over here is that they're all minority investments. So typically it's a 26% equity stake that you get in a company, whereas in developed markets you really can do complete buyouts. You can buy 100% of the company. And therefore what happens is when you do a 100% buyout, you have the ability to put leverage on it. So you can add debt to the balance sheet, and therefore your ability to increase the returns is far higher in developed markets than in developing markets like India. And so you really have to work hard to realize the returns from the equity that you put into a specific company. And you have to realize it from creating operating value rather than using leverage as a way to increase your returns.
Okay, interesting, Sri. Well, we have to take a quick break now. But when we get back, we'll take a look at how Sri and his colleagues work hard and play hard while in the office.